Hi and welcome to the Market Alert for Thursday, the 14th of April 2022. So yesterday, bonds, big tech, bullion, Bitcoin and black gold all bid as dollar and diamond dump. Talking about Jamie Dimon here, I think of JP Morgan. Dump diamond with pleasure and the dollar, but buy everything else, which is probably why we're seeing the metals moving higher, allowed to move higher. Talking of things moving higher, UK inflation yesterday rose to 7%. We know that's a joke. It's closer to 17 to 20% as cost of living crisis deepens. And again, on zero hedge, UK household incomes obliterated by inflation storm as living standards plunge. We can't go on like this. Well, interest rates are the next thing to go up. It's only because it's Easter that we've not had an announcement on that. Producer prices soar at record pace. Pipelines suggest peak inflation far off at the moment. This is the 23rd straight month for producer price rises. That's going to be passed on to the consumer. That's going to slow the economy down. And futures prices rise on earnings as earnings seasons begins. And yes, the markets are up strongly overnight because they can be, because we're going into the Easter weekend. No one's going to sell at the weekend. Notice that the war's disappeared, or more or less taken a back seat now. And we're going to start looking at the economy again. We've got quite a lot of news items today. I've added back in the low impact ones because I noticed that a few have been missing, and that's because they've been downgraded. And yesterday crude oil wasn't there, but then when I put the low impact news items on, it turned up. So I've put this on for a reason. And also, let me just go back to yesterday and show you something else as well. The RPI, which I wondered where it had gone and they'd stopped reporting, has been downgraded to a low impact news item, which is bizarre given the fact that it's an inflation indicator and it's actually higher. I think it's, again, there's this sort of, well, bury the bad news, will you? Hide it. So if you want to see the RPI, you've got to look at the low impact news items at the moment. There you can see the RPI moving to the upside there since March of 2021. So yeah, just a thought there for you while I'm thinking about it. What else have we got today? Credit condition survey, that's out at 9:30. European news there. We've got Lagarde, she's out today. The criminals making an appearance. That's all at lunchtime. Then we get the US news all the way through then until 8:50 tonight when Mester speaks. We also got natural gas storage. I didn't know that one even existed, but it looks like it's forecast to actually show an increase in storage. It was minus 33 before. Anything else? Retail sales from the US and the core retail sales, but otherwise it's the last day before the market closes tomorrow for the Easter weekend celebrations. The US is open on Monday, but the UK is closed, so 4 days. Gold-silver ratio is currently moving to the downside, which you can see there, which is interesting because when we get to around the 76 area, we can expect the market to top out in the chart. So let's start off with the Dow. I'll just find it for you. And yesterday we can see the market moving back to the upside on earnings reports and going into the weekend as well. Like I say, the war seems to have taken a back seat, and the talk of ceasefires and everything now seems to have disappeared for the time being. So we can see the Dow moving there. It's gone through the 50 and the 5-bar moving average. 20 is in the way at the 78, but I'm expecting this to sail straight through this today. Nobody wants to sell before a bank holiday weekend. That's generally the pattern. In the 30-minute chart, you can see yesterday the market moving lower, and when we kicked off in the afternoon, it was just straight up, and that's the way it's remained, and we're continuing to do that, having already taken out yesterday's high already in the Dow. In the German DAX, we may see a similar picture. We've got a lot of demand for yesterday, oversold on the downside. We're now free to move to the upside. So let me just get rid of a few of these fibs and let's just draw in some targets on the upside for today. We've got all of these here. We're at 38 at the moment, so we'll just remove that just to make it a bit clearer to see. So they're the numbers for the upside. Also notice the 62 ties in with a high that we've got here, and also the 20 bar moving average as well. So that's sort of a target to the upside. We'll look at that no, we won't. Let me just do something here just to get some idea of where that could go. So that's where we are at the moment, and how many points up that is. So that's 200 points up to the the 62% retracement there, and the 20 bar moving average. So 200 points on the upside there if the market continues to move to the upside. In the 30-minute chart, again, yesterday we had some weakness on the downside following the UK inflation numbers. The market then eventually made its way down, we can see there. And then we had some momentum shifting, as we can see with the divergence. We had a double bottom in here, just below, and the market then going up with the US and continuing to do so, also above yesterday's high at this time as well. Might get a small pullback with the futures, but I've seen this too many times over the last 30 years. The market tends to move higher because that's how it works. Nobody wants to sell in and have short positions held over the weekend as a rule. And there you go, you can see it jumping again there now, but wait for a pullback on that before chasing any move to the upside. In the 5-minute chart for yesterday, the market's reaction to the UK inflation, and then we traded sideways, managed to move up, and then we went back and then put in an 89 here before moving down. Very quiet yesterday morning, and it took until the market just drifting down a bit, struggled there at the DP. It was overbought and everything swapped, moved back down. There's that double bottom that we saw in the 30-minute, but also inside of this we get an 89% retracement before the market moves to the upside there. And then overnight prices continue to move higher, and as we come up to the current point there, we've got the R1 already with the market going through, and we're 15 minutes away from the futures market opening at the time of recording as well. So yeah, prices definitely on the march to the upside, and like I say, watch that 62 in the daily chart. That's the one that's currently 200 points away from where we are now. In the currencies, I'll just get the right chart. In the yen, the market going through the double top only overnight, trading up to it yesterday. Well, just sneaking through it, and at the moment currently holding as the dollar starts to move lower. There's the 30-minute chart, which is impacting across the currencies. There's the buying opportunity at the R1 with the demand, the crossover there as well. Market up and then back, and currently 89% retracement, attempting to move higher, needs to take out the high here. In the pound, this shot up yesterday, as I said in the market alert. That means that interest rates are going to have to rise with inflation being higher than forecast. Currently we're trading at 89% there, as prices have retraced from there back up to there. So we need to take out the resistance to the left here as well, and then obviously we're moving up to this level. The dollar is moving lower overnight, but it took until yesterday afternoon for the pound to react at 1500, 3 o'clock, when the pound all of a sudden took off, and that's because the dollar started to move lower, which we'll look at. Let's have a look at it now. And let's just go to the dollar for June. You can see there the dollar dropping yesterday afternoon. It is seriously overbought at the moment, heading down towards 38% retracement, closing below the 5-bar moving average. So watch the 38% retracement there. In the monthly chart, we were close to the 78, didn't quite get there. Certainly through the 62% retracement though. In the metals, in silver, prices still moving up, 25 there. We're overbought now, and like I say, you want to watch this support in the... There we go. Let me just get the actual low of this bar. Yeah, so 76 really. You want to watch the 76 level for the gold-silver ratio, as this tends to be a bit of a support. There's a couple of lower ones there down at 73, but watch that 76 because you can see how it's formed a bit of a floor for the ratio. And also we've got a narrow bar here at the 89% retracement as well, so could see a bit of a pullback there, unless of course we can drive through and head back up to the recent high where the prices got slammed, which is 27.15, so the 27 level. But first you've got to get through the 26, which is here, which is going to take some doing, because you can see that we had selling there before back to the 200 MA. In the 30 minutes, very choppy around the London fix yesterday, but managing to move higher, but overnight coming back to the DP, oversold, divergence, crossover, turning back to, there's also some buying in there as well. And then the market trading up to the previous day's high, which it's kicked back to at the moment, heading back to an oversold position and sitting on the 20 bar moving average. In the gold market, this hitting a 50% retracement back to there. So looking a bit weakish there. Depends if the dollar can find any strength, but the 5 bar moving average being the first area of support for this market, before you then get down to the 38% retracement. And finally, crude oil managing to move back to the upside, despite the fact that they had record inventories yesterday of a surplus of 9 million barrels. And this continuing to move on the upside, which is not going to help inflation at all. Okay, that's it for this one, and until Tuesday morning. So have a great Easter weekend. Enjoy the sunshine, which is forecast for the UK, rarity, but enjoy that. And I will speak to you on Tuesday. So as ever, thanks for watching. See you in the next one.